Wall Street closes mixed. The Nasdaq corrects as Google parent Alphabet and Microsoft's earnings drag ahead of tonight's Fed policy decision. The street largely expects the Fed to keep interest rates unchanged this time around. Crude gains over 1% on geopolitical concerns and a higher global growth forecast by the IMF. Asian markets trade largely lower, while the GIFT Nifty is suggesting a muted start for the Indian market. L&T's third quarter revenue beats estimates, but a margin is a significant miss. Order inflow remains strong, and the management tells CNBC TV18 they could end the year with an order inflow growth of over 20%. Dr. Reddy's, meanwhile, reports a beat on estimates led by better-than-expected sales in the United States. And in key numbers to track today, Maruti Suzuki is expected to report a decent set of third-quarter numbers, while commentary on U.S. sales would be key to track when Sun Pharma posts its numbers later today. The International Monetary Fund hikes India's growth forecast for FY24 from 6.3 to 6.7%, also hikes the forecast for FY25 and 26 to 6.5%, citing resilience in domestic demand. The IMF also hikes global growth forecast for 2024 by 20 basis points to 3.1%. Good morning and welcome to Power Breakfast. Those are all of the top headlines that we're tracking this morning. The global handover has been a little bit muted, and you do have most of Asia, which is in the red as well right now. So what's leading the losses is the Nikkei market. So the Japanese index down a full 200 points right now. You have Taiwan also, which is trading with cuts. So there's 0.5% shaved off on the Taiwanese index. Seng, like you can see, is down 0.3% as well. Actually, all Asian markets barring the Straits are seeing some amount of red for sure. So you have Shanghai, which is trading with a little bit of a cut. Seng, like I pointed out, is down around 0.3%. The GIFT Nifty will come up for you, and it is indicating that after that big last hour sell-off that we saw for our own markets yesterday, once again, the start could be a little bit muted. So we're around 13 points in the red right now. That is what is really going on across Asia. But let's also talk about the U.S. market now, because ahead of today's Fed decision, we did have Wall Street, which ended Tuesday's trading session quite mixed. So the Dow was up around 100 points. The S&P 500 was flat, just about 3 points lower, like you can see on your screen. And the Nasdaq Composite was the big underperformer of the day. It saw a slide of 118 points. Now, it was a day of big tech earnings on Wall Street. So you had shares of Alphabet, which saw close to 6% of a cut in terms of after-hours trading, and the company's ad revenue trailed projections. So that has been a little bit of disappointment that came through on Alphabet. Revenue and profit, however, came in higher than what was expected. Meanwhile, if you look at Microsoft, they reported a better-than-expected second quarter set of earnings. But we saw a beat on the top and the bottom line as cloud growth was stronger than what was initially expected. Finally, you also had payments firm PayPal and parcel delivery firm UPS, which announced cuts in their respective workforces as well. So the street didn't take to that too well either. PayPal will cut about 9% of its global workforce. That is about 2,500 jobs, while UPS has announced cuts of around 12,000 jobs. So like I was pointing out, a little bit more negative than positive ahead of that big Fed decision tonight. But we'll talk more about that because, like I was mentioning, that decision is expected tonight. And across the board, most people are expecting that the Fed will hold rates steady this time around. We have Steve Leisman joining us with a wrap of CNBC's Fed survey, where only 9% respondents see Fed cutting rates in the March meeting.
Contrast to the market's aggressive outlook for Fed rate cuts this year, respondents to the CNBC Fed survey see fewer cuts and starting later. Just 9% predict a March cut that rises to even money for May. Only in June is there a majority of 70% looking for a rate cut, while futures markets have priced in almost 6 cuts. Respondents on average see just a bit more than 3. The Fed is expected to end quantitative tightening, that's the reduction of the balance sheet, by November. Meanwhile, the probability of recession remains elevated, but it's fallen to 39%. That's the lowest level since the spring of 2022. It looks like the 25 respondents on average are forecasting the Fed will cut rates at an every other meeting pace, and that would begin in June. You can see the up and down there, starting in June, then September, and then December. While respondents predict a cautious Fed, on balance, I think the Fed should be a little bit more aggressive. 56% say the bigger risk is that the Fed cuts too late, while 44% say the risk is going too early. Joel Naroff, president of Naroff Economics, says there's little reason to expect a major slowdown in the economy, so the Fed will likely not risk the gains in inflation it has made by easing prematurely. recession probabilities fell for the second month in a row. It fell 2 points to 39% from a high of 63 in November. The probability of a soft landing remains unchanged at 47%. Now, it's fairly typical for this group of Fed watchers, economists, and strategists to be more closely aligned with the Fed's own outlook than with the markets. The question remains, who has this right and how much it matters? By 2025, 2026, the market and the survey and the Fed all converge towards the same 3.3, 3.5% funds rate. But it looks like, guys, there's going to be some back and forth and maybe some tussling along the way.
All right, Steve, thanks a lot for getting us all of those highlights from the Fed survey. Staying with what we really expect from the Fed today and the policy at large, let's listen into Allianz's Chief Economic Advisor, Mohammad El-Erian, giving his expectations from the Fed meeting.
They're going to welcome the reduction in inflation. They're going to take a lot of comfort from the fact that it didn't come at the cost of growth. The U.S. economy has been exceptional, and the Eurozone data today reminded us of this U.S. exceptionalism. They're also going to say that their job is not done, and they're going to maintain optionality. And most importantly, I think they are not going to validate the notion that rates are coming down in March. They're going to keep their options wide open. They have the scope to cut rates. I don't think it's going to be as aggressive as the market thinks.
All right, may not be as aggressive as the market thinks. That's a word coming in from El-Erian. But with that, let's move on and talk about how all of these global cues really set us up and all of the stocks that you should track today. We have Nigel, Vivek and Hormaz all here with the trade setup. Guys, a very good morning to all of you. Vivek, coming to you first. You know, we saw that last hour sell-off in our own markets. Looks like things might be a little bit muted at the open. But take us through everything we should watch.
Well, you're absolutely right. Good morning. So, like you mentioned, even the overnight cues are suggesting quite a bit of a sell-on rallies is what you're seeing. Remember, the IMF, some positive news coming there, global growth forecast, India growth forecast, all of them have been revised upwards. Yesterday, the important cues was that despite Alphabet and Microsoft, delivering earnings in line with expectations, both of them did see sell-off after the results came through. Alphabet, of course, the ad revenue is something that missed estimates. Now, talking about crude oil prices, the key cue, yesterday they gained, and Brent now hovering around the $83 a barrel mark. So that'll be something that the markets will continue to watch. Indian markets, like you mentioned, gave up early gains yesterday, ended near the low point of the session. So extremely volatile trading session. Every alternate day you're seeing wild swings on either sides. Yesterday, what drag? Reliance did see profit booking after the record-breaking rally the previous session. ITC and Bajaj Finance were amongst the key drags after earnings misses. Today, what are the key results to keep an eye out for? Sun Pharma, Maruti, amongst the Nifty, Bank of Baroda, Shree Cement and Dabur will be some of the other names in the F&O space that will react to their earnings. Results reaction, keep an eye out for L&T. While headline numbers were quite good, the fact that margins continue to this point may see L&T selling off quite a bit today. Dr. Reddy, SRF and M&M Fin too will react to the results. Like you mentioned, Asian markets, GIFT Nifty indicating a subdued start for our own markets.
Okay, subdued start. Let's see how we move from there. Vivek, thanks a lot for that. Let's also talk about all of the stocks, and Hormaz is here with that entire list. Hormaz, good morning.
Morning, Pavitra. And as Vivek was highlighting, right, L&T will be the stock for the day to watch out for, and that despite the strong management commentary, it will be the earnings miss that might just overshadow what the management eventually ended up saying in the earnings call. Dr. Reddy's as well, the numbers were a beat. This was aided by new products performance. They gained market share in their base business in the US along with new product launches, so that contributed to the earnings beat as well. PB Fintech, and that turned PAT positive for the first time, and the stock now is almost 8% away from its IPO price of 980 rupees. So we'll keep an eye out for that. SRF's numbers were also a miss on estimates, but that was on expected lines because of the chemicals business. And the management, though, has said that they are confident of significant improvement in the fourth quarter, and that because of the large number of plants that will come on stream during this quarter. M&M Finance as well, although the numbers were a beat, the management cut its guidance in the earnings call. They said that the ROA target of 2.5% in FY25 is difficult to achieve because of the tough NIM conditions, and the NIMs are likely to be softer than the earlier estimates. Cochin Shipyard, Voltas, Piramal Pharma, Astral, Web of Global, Star Health, all of these will also have reported earnings after market hours and will react to them today. TCS has expanded its strategic partnership with Aviva with its new 15-year deal. A report suggests that it's worth $2.5 billion, although CNBC TV18 has not independently verified the deal size. And lastly, Ganesha Ecosphere has launched a QIP to raise funds. The floor price of 995 rupees is a 5.5% discount to its previous day's closing price. Back to you.
Okay, Harmaz, thanks a lot for taking us through all of those stocks. We're going to watch for these in today's trading session. Finally, Nigel is here with the cues from the futures and options space. Nigel, the last hour yesterday really saw things turn quite a bit.
Well, that's right. I think a couple of reasons played out. One was that the institutions, the net institutions, the CFI and the DI number put together, they sold close to around 1,000 crores. And the second factor, there was some unwinding of positions on the Nifty itself because the open interest was lower by close to around 9% odd. What about the FIs? Well, they just lightened their positions very little, both on the long as well as on the short side. So it remains more or less constant, with short positioning at around 76% of their total mix. What about the options data? Yeah, well, yesterday was the day when the call writing came back into play. So we saw aggressive call writing, 21,700 call, 21,800 call. Between them, they added close to around 60 lakh shares. And the put writers, well, they were running for cover, particularly when the market started breaking down. 21,500 put as well, which was the important level. Well, out there as well, we did see unwinding to the tune of close to around 11 lakh shares. And on the 21,600 put as well, there was unwinding even on that strike. Well, what about the PCR? The PCR came down to around 0.82 approximately. Remember, it was at around 1.2, so it's coming down. We've seen the markets normally see a bit of a bounce when it comes down to around 0.65 to around 0.7. Which brings us to the levels. On the upside, the 21,800, 22,000 mark, that appears like a resistance level. Why do I say that? Going by the options data, and secondly, the technical factor that's playing out. A 61.8% retracement of the recent fall from around 22,200 to around 21,200. Well, that comes in at this level of around 21,800 to around 22,000 odd mark. And yesterday we went to 21,800, we did a U-turn. On the downside, we have crucial support at around the 21,000 to 21,100. And I say this because you have a technical level out there. You have the 50 DMA that comes in there. And a few sessions ago, we went to those lows and we did see a bit of a bounce as well. And, for today's session, I'll be looking at the Nifty Bank. Why is that? Overnight, you had the Nasdaq that was underperformer. The Nasdaq futures as well are lower because of Alphabet. And in yesterday's trade, if you just pull up a split screen, you'll see that the Nifty, well, it ended sharply lower. The Nifty Bank actually was a relative outperformer. Yes, in this month so far, the Nifty Bank has been a relative underperformer, but I'll keep an eye out on the Nifty Bank. The bulls may turn to it and say, let's see if you can support us for today's trading session. It plays out the weekly expiry as well. So that's the crucial one that I'm looking at. Back to you.
Okay, so let's see if the Nifty Bank does show up to really support the bulls. Nigel, thanks a lot for getting us all of those cues. We are going to get into a short break now, but when we return, we're going to talk about L&T. We'll get you the company's third quarter earnings as well as what the management has to tell us. Stay tuned. Welcome back. You're still tuned into Power Breakfast. Let's talk about some big earnings reactions that we are expecting today. L&T posted numbers post-market close yesterday. By the way, the stock was also down around 2% when the market closed. So we have Vivek here to take us through the earnings fine print. Vivek, mixed set?
Well, absolutely right. L&T delivered a mixed set of results. So what are we looking at as far as L&T is concerned? Number one, we compare the results against our own poll, and number two, we go ahead and compare the results against the own guidance that the management has given. So number one, when you're talking about how the results fared against our expectations, revenues above the CNBC TV18 poll, core EBITDA is slightly below, margins were a miss, and that's going to be a bit of a disappointment. Net profit too below our own poll. But let's have a look at what's actually worked for the company. The order inflow has been extremely strong. So the management, which had given a guidance of 10 to 12% order inflow growth, has actually now said that they will see order inflows of over 20% for FY24. That's a strong upgrade coming in as far as the order inflow is concerned. Remember, the management has given a revenue growth guidance of 12 to 15%. The management said that they're likely to go ahead and see high teen growth. So there is a possibility of a revenue beat through also coming in. But the core EBITDA margin, remember, they started the year saying that core EBITDA margins are expected to be at around 9%. They trimmed it to a range of 8.5 to 9% the quarter gone by. Again, another smaller downgrade coming in. They're expecting to now finish the year at 8.25 to 8.5%. So that's going to be a bit of a disappointment. Why is the margin is coming about? The legacy projects that the company continues to execute is a bit of a concern, and that is actually going ahead and being a challenge. Now, when you're talking about the order, outlook or the ordering activity, Indian market, the domestic market, expected to remain subdued for the next couple of quarters, given the pre-election code of conduct comes in. But the ordering activity, as far as Middle East is concerned, continues to remain extremely robust. So hydrocarbon segment is expected to get some more big orders even in FY24. Overall, mixed set of numbers. The margin miss is the only blip. been an otherwise strong quarter, and the order inflow upgrade is something that will be taken quite positively. We spoke to the management, during the conference call that they held for media, and the management did reiterate some of the margin targets and also gave us fresh guidance for the upcoming year.
Unlike order inflow, where a couple of earlier wins or later wins can move the needle, revenue is fairly set because we know what we need to execute in the last 3 months. So my guess is, I think, as compared to 15%, we will outperform that. And just as a landing place, I think I'm assessing that to be more closer to high teens. We will do all our best to see how far we can improve, but it appears to me it will be high teens. My sense is we will be at similar levels as we close this year, and it is possible that given the dynamic that I spoke to you about, it could fall between 8.25% to 8.5%.
All right, that is the word coming in from L&T. So it'll be interesting to see how the stock reacts to these numbers, because the numbers, like we were mentioning, are mixed, but the order inflow guidance for FY24 has been raised. We are going to get into a short break now, but on the other side, we're tracking all of the cues from the commodities market. Stay tuned. Welcome back. You're still tuned into Power Breakfast. Let's now talk about all of the cues from the commodity markets, and we have Manisha joining us to fill us in with all of those details. Manisha, good morning.
Morning, and thank you for that, Pavitra. I'm looking at the crude oil prices, which have gained a percentage point higher on the overnight markets. Well, the higher global economic growth forecast by IMF has been supportive. The escalating tensions in Middle East is another thing. And then the U.S. is thinking about reimposing sanctions on Venezuela. The markets also are looking at the U.S. crude stocks, which have declined by 2.5 million barrels. And then there is the OPEC meeting on 1st of Feb. There is the FOMC meeting that's also being conducted today. So there's lots of data that you will see in the next couple of days that can keep the markets moving. Not just crude oil prices, we have seen some profit taking come in for the metals as a sector. Gold prices, for one, have seen a decline, but copper is trading at a 4-week highs. All eyes on the FOMC announcements today.
All right, we're all waiting for that. Manisha, thanks a lot for getting us all of those details on where all of the commodities are really at right now. But moving on, another update. The President of India has appointed 4 full-time members to the 16th Finance Commission. So the Gazette notification names A.N. Jha, former member of the 15th Financial Commission, and former Expenditure Secretary Annie George Matthew, former Special Secretary, Department of Expenditure Niranjan Radhaksha, and Executive Director Artha Global, and Soumya Kanti Ghosh, who's Group Chief Economic Advisor at SBI, as the 4 full-time members to the Commission. Remember, on 31st of December, the Centre had also appointed Arvind Panagaria as the Chairman of the Commission. So that is an important update that came through. But with that, we are going to have to wind down on this edition of Power Breakfast with the news that the Asian markets are still mostly in the red right now. So you're definitely seeing a bit of a pullback, with the Hong Kong markets and Nikkei markets really leading the losses. So the Hang Seng is down over 1%, 1.1%. The Nikkei markets also seeing an over 170-point cut right now. Taiwan has slipped further. It's 0.6% in the red right now. And for our own markets, the implied open is a little bit muted as well. So maybe we will see a little bit of a soft start. We're around 13, 14 points lower on the GIFT Nifty. But let's see how we really move from there. Thanks for tuning into Power Breakfast. We have Bazaar Morning Call after this short break.